So I think we have to continue with the lesson, right? And we're on kindergarten, right? So in the other lesson, so in the other lesson, we spoke about the first brokers, right? So we spoke about the brokers. We spoke about the type of analysis, right? I said we have the fundamental, right? We have the fundamental. That's the news, right? Then we have the technical, right? That's with trend lines, support and resistance, supply and demand, right? All are under technical, right? So then we have the sentiment, right? So with the sentimental analysis is based on people's opinion, right? Some will say, oh, looking at the chart of Bitcoin, I think it will go up, right? But that they don't have any analysis. It's a failing analysis, right? They feel like to go up. Sometimes it does go up, right? So we'll focus on the technical, right? So then let's go to the type of charts, right? Or let me clean this. No, I have to clean everything. Okay, delete. So we have a law, right? The type of charts we have a law. We have the normal charts. That's a candlestick, right? That's a candlestick. We have the bar chart. We have the line charts. You have the Heikenhachi, right? Heiken. Right. So for the mistake, I think there's a key here, right? Then I think this is the 4 charts we have, right? There's a lot bar. There's a 4 we mainly based on, right? All the charts are important based on how you're using it, right? So with the candlesticks, sticks, it has more detail, right? You have the wick in it, right? It has a wick, it has a close, right? It has the open, it has the high and low, right? High and low. So it's more detailed, right? Of the 4, it has more details in it, right? And sometimes if you tend to read it a lot, you tend to close trades quickly, right? Because you're reading everything. If you see something like this, right, at a support, you just tend to name it. Okay, because there's a rejection here, these guys are trying to push the market up. Sometimes they do. Sometimes this close is for a higher momentum, for more drop, right? So if you tend to name this stuff when you're using the candlesticks, you tend to close trades very, very quickly. Sometimes you hold trades too. They all have their advantages and disadvantages, right? So you tend to name this as a rejection. Some people also name this as, okay, the sellers couldn't pass through this line, so they are more buyers in it, right? And sometimes it fails and there's more drop, right? So that's how the candlestick works. And let's move to the bar chart, right? Okay. So the candlestick has the wick, the close, the open. Oh, okay. I should have explained each, right? Sorry. Okay, so let's have a diagram like this, right? These are the candles, right? So we have something like this, right? If this is bullish, right? If this is bullish, this is where you open, right? So no, if this is bullish, right, this way you open, it went up here, right, to the side, right, and came down. No, I'm having a bearish one, right? So if this is bullish, this is the open, right? So, and this is the high went, right? This is the open, this is the open. You open there, this high went, right? Then it has to come down again to this lowest side. Is the low point, right? Is the low point, right? Until it falls up here. Till it got close, right? Till it closed here. This is what we call the wick, right? The wick is sometimes called the tail of the candle, right? So this is the wick, this is the body, right? That's for a bullish structure, right? You open here, this is the high one, this is the lowest part of one, and it close somewhere here. And with the bearish too, it will open here, right? This will be the lowest point it went, right? This will be the highest point it went, then it closes here, right? So this is how the candle is, right? It has a wick, it has a close, right? For the bullish side, it has a close, it has a open, right? Then the low it wins plus the high, right? And this is called the body, right? So let's close this. Okay. So I'm going through all this without you guys going through them, right? And I'm choosing the one that is very important. There are some lessons that are not. So you just skip the one that are, right? So with the type of charts, what I normally use, I use the line chart, right, and the candlestick, right. I don't use this much. I can actually sometimes do, but if you want to be the most patient trader out there, you have to use the Icanachi because it's very good. You can stay in trades very long, right? But with all this candle, there are a lot of fake outs in it. You can close very quickly, and if your strategy is not, if your mind is not strict enough, you close trades very quickly. But with the Icanachi, if it's going down, you see the candle as one color, right? So you can stay in trades for long. If you don't read your P&L, you're going to stay in trades for long. Your P&L is your profit and your loss, right? The amount that runs in your profit and the loss, right? That's a P&L. So with that, if you're not looking at your P&L, you can use that. You can achieve very well, right? But with the rest, there's a lot of fake outs. You can stay out of the trade, right? So let's see how the bar chart is, right? As the name implies, right? It's only bars, like there's no wick. So this is what we talk about, right? This is where the type of candles is, right? So this is the bar. This is how the bar looks like. Right, it's one of the weird candles out there. So this is how it looks like. He also has the wick here, right? Sometimes I don't call it wick because with this, all this side are the body of the candle, right? All this are the body of the candle, so it normally don't have a wick. All this one line is the body of the candle, and this is the open, the close, right? Open, the close, right? If it's for a buy, this is the open, this is the close. If it's for a sell, this is the open, this is the close, right? No, this is the open and this is the close. It's the opposite of the buy, right? So with this, all these are the body of the candle, right? Some people say yeah, it doesn't have a wick, but with me, this is the body of the candle, right? This is the highest point it went, this is the lowest point it went before the candle closed, right? You're not going to use this, but you have to know something about it. Then this is how the Icanashi is, right? So in a trend, you see this to be one, right? But there was a lot of pullbacks here. With this, there was a lot, but you see it as a downtrend, right? That's the power of the Icanashi. Looking at this, right? This retracement, right? You wouldn't have closed your trade. You would have stayed in it, right? So we have traders who use this, right? And I should explain myself in this. All what I'm teaching, you're not going to use everything. You have to know something about it. You need one thing, right? So you only need one. With the price action traders, we tend to learn a lot, and that helps, right? So if you want to use any of the charts, you commit to it, right? If you are using Icanachi with your strategy, you stay with it like through thick and thin, right? You don't change the chart. You don't change to candlestick. Let me see what candlestick is doing. No. If you're using candlestick, you stick to it. If you're using line chart, you stick to that fucking chart. You don't change it. You don't look at anything. You should be committed to each chart you use, right? So there are a ton of it, right? But we only see there are four main ones. So you choose which one you want. Which one are you going with? Are you using the candlestick? You master your strategy on it, right? Entry, exit. If you are using the bars, you master your strategy on it. Entry, exit, right? If you are using the line chart, you master your strategy on it. Entry and the exit. If you are using the Icanachi, right? You master it. Use entry and exit. You never change the chart. Never change it, right? So that's what that's what I will explain on this thing. I don't know, my bundle is just, what's wrong with this? I think it's about, so that's it, right? You stay on one, just pick one and use it. Don't use all the charts. You conflict your analysis, right? If you're using the candle, stay with it. If you're using the line, stay with it. Okay, this is how the line chart look like. It's just a line, right? Like this. You only see the close, right? The open, the close of the candles, of a lot of candles, series of candles, right? So let's say on the 4-hour time frame, right? You see about 5 candles, but this will be just the close of the candle, right? You would have seen the open, right? So it closes here, then if there is more drop, these are a series of candles in one, right? It helps, sometimes it doesn't. You won't see the wick, right? Sometimes if you try to place your stop loss here, there'll be a news wick out. It just wick you out, then it goes in your favor, right? All the charts has advantages and disadvantages, right? Not all of them, not, yeah, all have their good and bad, right? So you choose one. With the line chart, it also has its own good and bad too, right? There's no wick in it. You only see open and close, but there are some settings you can do on the line chart. You see the wicks, right? You see wick close and wick open, right? It means if there's a structure like this is a wick, how long the wick went, right? And how short it went on the sell side, right? So you can adjust the settings to that. You see just the wicks, but sometimes you can adjust the settings to see only the open and the close, right? Choose one you want, right? I normally train beginners on this, right? So if they master this very well, that's when we shift to the candlestick, right? This is very good to learn in forex, the beginner stage, right? So let's say you have a support, right? You can illustrate it to them with this, right? If there's a break, there's a retest, then right, you can illustrate this very well for the beginners, so they think the market moves this way, right? Sometimes there can be a support here, the market will just rally back up here and try to reverse here, right? Nobody knows where the market turns. You have a strategy as a guide, right? Don't say I know the market will do this, I know the market will do that. The market don't don't care about you, bro. You don't know. It might work sometimes. Sometimes it doesn't work, right? So your bias should be your strategy. Should be your edge, right? Don't say don't be a sentimental trader. I think the market will move this way. I think it will move. You get disappointed, right? So that's it for the type of chart, right? Let's move into we're moving into support and resistance, right? Let's have this. So as the name suggests, right, a support is the floor, right, and resistance is the ceiling, right? That's the bare explanation you can give to it, right? Support is the floor, resistance is the ceiling, right? So let's say we have a market structure like this. I told you in our other lesson, we have three type of market structures, right? And if you can remember what I said, we have three, right? We have the bulls, right? We have the bullish structure or bull. We have the bearish structure, right? Then we have consolidating, right? Consolidation or sideways, right? So we have the bulls, we have the bears, we have the consolidation or sideways, right? With the bulls, you can say bullish, uptrend, up, right? With the bears, you can say bearish, downtrend, down, right? You can call, or you can say it's hawkish, right? Hawkish. That's sometimes the traders use to outsmart people who don't trade, right? With the bulls, you can say dovish. Okay, I can tell you the market is dovish, right? It means it's in a buy. Okay, we can also see buys for this, right? We can also see sells for this. So there are some petty terms traders use to outsmart people who don't trade, right? Maybe if you don't want them to know what you're doing, you just tend to use this term to outsmart, right? But why would you do that? So let's go. Let's delete. No, I don't have to delete everything. So as I was saying, right, the support is the floor, then resistance is the ceiling, right? So we will have everything for every structure. Let's say in a bullish structure, right, we have in higher highs, higher lows, higher highs, higher lows. This is too plain. The market don't move bullish this way, right? The market don't do this in a bullish structure. This is too plain. Sometimes you have a retracement to somewhere here, right? Then it rallies back up, right? The market isn't perfect like this. So this for educational purpose, but the market don't move this way. The market move up in this style, but not all the time, right? Sometimes you have an up move like this, then a silly retracement like this, right? Then we rally back up, right? So there are three types of retracement, right? We have the simple, right? We have the shallow, then we have the deep retracement. So with a simple retracement, this is a simple one, right? Goes up, it just come down, right? And shallow, as the name suggests, it's not all that deep, right? It's not all that deep, right? With a deep moves this way, it's just the hell out of you, right? You think it's a changing trend, but nah, This is a retracement to buy back up, right? So we have the simple, we have the shallow, then we have the deep retracement, right? So you'll meet this in the market whilst I'm teaching you with only the simple retracement. You don't always meet the simple retracement in the market. You meet the simple today, you meet the shallow maybe next month, you meet the deep one maybe the months before, right? And you'll be saying, okay, maybe you know just a simple, so it's the simple one all the time. No, sometimes you won't meet the simple retracement, you are going to meet the deep retracement, and that's no good, right? So this is how support and resistance work. Support is the floor, resistance is the ceiling, right? So with an up move like this, right, with a bear move, we have the higher high, higher low, higher high, higher low, right? So this is how the supports come in. This is support, right? This is resistance, right? So this for the simple retracement, right? This is support, this is resistance, and a broken support becomes a resistance, a broken resistance becomes a support, right? Let me say that again. A broken support becomes a resistance, a broken resistance becomes a support, right? So let's say with this, here was a resistance, right? So I need to name resistance as R here, right? And this is support, right? When you get broken, this is a support now, right? And this is a resistance now, right? So now there's a resistance, this is support, but it was a resistance not too long ago, but since it got broken, it's a support now, right? Let's have the same for the bearish structure, right? So we have the low, low, high, low, 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 high, low, 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 high, low, low, right? So with that too, we have a support and a resistance here. My drawing is whack, right? Let's have it very well. So you have something like this, right? So this was a support, right? It's a resistance, right? So there was a resistance, right? So resistance, this was a support, it got broken, it's now a resistance, right? Or a ceiling, right? This was a support already, it got broken, it's now a resistance, right? This was a support, it got broken, turned into a resistance. This was a support, turned into a resistance, right? Then this is a support now, also broken now, so now it's a resistance, right? So as I said, a broken support becomes a resistance, a broken resistance becomes a support, right? And there are three types of retracements. We have the simple, we have the shallow, we have the deep retracement. And if you know how to catch them, that's when the trading system comes in. How are you catching the deep one? How are you catching the simple? How are you catching the shallow retracement, right? The market moves in three phases. We have the bull phase, we have the bearish phase, then we have the consolidating phase, right? And your strategy should be able to play out in all this structure. That's how trading is difficult, right? You don't normally know which phase you are in, right? But your strategy should be your edge, right? So there are a ton of strategies out there. I stick to the trend line. I don't use support and resistance that much, but I don't use break and retest that much. Sometimes it works, sometimes it don't. But with the trend line, I just go with it, right? So I heavily base on with the trend lines. I'm not going to use a break and retest. Like I won't use it. Some traders use it though, but I don't use it. So I just stick to the trend line. When there's a break on the trend line, I just enter, right? Some traders wait for a pullback, wait for a break, like wait for a retest. Like we have aggressive, right? We have aggressive traders, and we have the submissive, right? With them, they are waiting for the candle to come back to. Sometimes the market don't come back, right? Sometimes it has done a lot of damage up here for it to just pull back to that side again, right? We are just going down. So that's a miss trade. You miss about 10 trades in a row, right? you're not trading, and it gets boring, right? You just want to just trade, so you won't wait for the break again, you won't wait for the retest again. You're just, wow, let me sell this thing, it's not coming, it's not retesting, let me just sell it, right? Then you tend to sell it, you lose the trade, right? So choose what works for you. If you're using the break and retest, use that one. If you're using trend line, use it. Support and resistance, supply and demand, you use it, right? So that's it for the support and resistance. If you want to map it out on the time frame, the higher the time frame, the longer the chase, the lower the time frame, the shorter the chase, right? So if you mark it on the 4 hour, it means you're going to make all your decisions on the 4 hour. Don't mark support and resistance on the 4 hour and go trade on the 15 minute. That sucks, right? If you mark it on the 15 minute, right, you trade on 15 minute, do everything on the 15 minute. If you mark it on the weekly, you're trading on the weekly. If you mark it on the daily, you trade there, right? So let's clean everything. I said the support is the floor, the resistance is the ceiling, right? Let's delete everything, right? Japanese candles, I explained everything, right? On the open and the close, right? I just explained everything with the open and the close. So if you don't get it, I don't know. I just explained everything here, right? With this. So that's how the Japanese candle came about. It was by a rice farmer, right? In Japan, right? And they were all trading the line, right? And he decided, okay, I can see the market open at a certain point, it closes at a certain point, it goes at a high at a certain point, it goes at a low at a certain point, till the new month begin, right? So why not create something for it? Then he decided to call it this, right? The candles, right? So the reason it's a candle is it has a body, it has a tail or a wick, right? So he gave it name as the candle, right? This is how a candle is. We can have a candle like this, right? It resemble the candle we used to have, right? Who uses candle by this time? I don't know. So with this is where we light the candle, right? So the candle is light here, right? For it to go in flames here, right? So this is how the candle is light. So this is the wick, this is the body of the candle, right? So candle can also drain, right, till it goes to zero. And the reason why we call it candle is when you fool with this, you get bent. It blows your account, right? So this for it ignites to blow your account. That's what my mentor told me, though. It's a funny statement, but I think that's very true. It bends you. You fool with this, it's going to bend you, right? So that's why we call them the candles. Okay. So we are done with this. We are done with this. We're done with this, right? With the fave, I think you need to know about this. It's a mathematician, Italian mathematician, right? Who just came about some sequence and said, okay, how everything is based on patterns, right? There are some rhythmic movements and everything. So he didn't usually do this for the markets, right? It was a mass thing he discovered, right? So let's say 0, right? It was 0, 1, right? Then the difference of this will be the next number, right? So he had a way doing it. So the difference of this, you add it to this to be the next number, right? The difference of this will be added to this to have the next sequence, right? So traders choose there are a lot of lines, right? We tend to use, let's say, this point, this swing highs, right? It's a swing low, right? We pull our fib to the side, and we watch how it moves to each level, right? So that if there's a weak rejections, the one people use most is the 0.618, right? So 0.618, right? You have traders also using the 0.75, right? Then this will be 1, this will be 0. That's the high, this is the low, right? Then they wait for the price to get to that zone. When there is a break, you're looking at 0.25, right? Some also look at 0.81 as where the market will get to, and eventually the market gets there, right? That's at TP level. We have people who trade solely on this. They use the fib, right? They wait for a swing high, they wait for a swing low, right? And they are waiting for retracement. I told you there are 3 types of retracement, right? We have the shallow retracement, then we have the deep retracement, then we have we have the shallow, we have the normal, shallow, and deep, right? So they tend to wait for a retracement, then they take that trade based on the retracement, right? They are swing traders, or they trade based on fib, right? And sometimes the market doesn't retrace. This is a shallow retracement move. The deep one, the market just go back to the 1%, right? And it sells, right? So with those type of traders, they are just waiting for the market to just show its head, right? For them to sell or either buy. They do same in a buy, they do same in a sell. So they look for the swing movement, they pull their fib, and they just wait for how the market tends to move. When there is a confirmation on any of the fib levels, they take the trades to the downside, right? I have a fib settings if you want to use it, that's cool. But right, this is how the fib works, right? So let's say there will be a fib trader here, right? So they pull their fib this way, right? I'm sorry, this is a race to go to what I use, but my fib is normally that's why. So we have this market move from 0, right? So with this swing high, swing low, right? So we tend to pull our fib. So the retracement happened on the 0.618, right? You see some people, this is run to the nearest figure, but we have some in percentages, right? You just set, it's a settings here, right? You just choose, okay, there's a value, you want it in percent, you get it in percent, right? You get 6.80, 61.80%, 50%, right? So they are just waiting for retracement. And with this type of traders, they taking a sell here, right? Look at, there was a bounce on the 618, right? So it means where are they taking their sales to? They're looking to sell this market to this zone, right? That's their TP1, that's their TP2, right? And there can be a TP3 here, but just focus on 2 TPs, right? So they hold this straight to the side, right? I said all the strategy work, you pick one, right? So with this, what type of retracement is that? Right? Looking at this on the fib, right? This didn't retrace on the 618, it retraced on 87, right? This is classified under the deep retracement, right? This was very deep, right? Very, very deep, right? So the deep retracement is about 87 to 100%, right? That's under the deep, right? So if it was a 618 retracement, that would be a shallow, right? 618 to 50 is a shallow, right? So shallow and deep, right? Sorry for my handwriting, sorry. Then this retracement is the normal retracement is from 3.38.2 to 23.6, right? That's normal retracement. Like, it's normal, it's not deep, it's not shallow, right? It's just between that range. And the market retrace on all this. You can't say all the time it will be on the deep, all the time it will be on the normal, all the time it will be on the shallow. There are some instances it retraces on the deep, it retraces on the shallow, it retraces on the normal, right? You can go back in history and check, right? So with this, if you are tending to try trade your fib here, right? It's your high, it's your low, right? And see what happened. We had a retracement in the normal one, right? So there was a normal retracement that worked here, right? Worked to the T, right? And if you are using fibs, you should master it very well. Know where to use your take profit, know where to use your stop loss, and don't change it. Don't use fib with support and resistance. They tend to complicate your strategy a lot, a lot. If you are using fib, use only fib. If you are using support and resistance, use only support and resistance. If you are using trend line, use only trend line. Don't say you use trend line, you use support and resistance, you use supply and demand, you use this, you use this. It conflicts the price action a lot, right? And with price action, there are a lot of stuff you have to major in one, right? You don't need everything. You need to know something about it, but master one thing, right? Don't go about all the place. Like, master one thing. If you are using support and resistance, right? With this, with the support and resistance traders, where would you have taken this trade? You would have taken this trade here. Yeah, a 1:2, right? This is a win for you. You come in again. Okay, you say this is your support. There was a retest on the support here, right? So you take trades here. You would have got a 1:2 here, right? And I told you, if you're on one time frame, stay on that time frame. Don't be moving to this time frame, move to that, right? So this will be a great week for a support and resistance trader, right? That's a great week. So you would have taken a buy here, 1:2. There was a retest. Take another buy here, 1:2. There was a retest. Take another buy here, right? That's a great week. The market don't, you won't get all this. So this was a perfect week for support and resistance trade. A fib trader can also cut the same trade with a support and resistance trader, right? So the fib trader is doing this, right? So shallow retracement, we also take the trade, your TP1, TP2, right? I'm coming again, right? This one has worked out already. So whilst you're looking for support and resistance, this fib trader is also using the Fibonacci, right? So you also draw some shallow retracement, right? TP1, TP2. It's also done, right? So you can use this same trade, you use support and resistance to cut it. The fib trader will also use fib. Trend line trader will also use trend line to cut this trade. Same trade, right? There's a test on the trend line, take buys, right? So all the strategy works, all the strategy. You choose one. You don't use all, but choose one. Know something about it. If you're using all, it will conflict you. If you're using the trend line, stick to it. If you're using fibs, stick to it. If you're using support and resistance, stick to it. A supply and demand trader will also come in here. They would have spotted a supply here, right? Because the supply and demand is normally rally, right? Base, then a rally, right? So there would have been so there was a rally here, there's a base here, there's a rally, right? So they would have pulled it for a retest here to this zone, they take the trade. So everything works, you just stick to one, you don't use all. Right, let me see how long this video is. I don't want it to be so long. 44 minutes. That's a lot. Let's move to moving averages. I don't use moving average, right? But I need to know something about it. What's a moving average? A moving average is an indicator, right? And if a candle is moving this way or the line chart is moving this way, it's calculated on the average price, right, of the highs and the lows, right? It's a mathematical system too, so it's calculate the average, then just does it in a line, right? So one line you see moving this way, you can turn your settings to a 20 period moving average, right? A 50 period, 100 period, right? That's 100. You can also have 250 period, like settings, right? So it just calculates between the highs and the lows, the average price, and just draw it as a line. So you have it moving this way. So it's a line that moves on the candle. So you have a candle this way. You see one on the chart. Here's a line moving under the candle, above the candle, right? That's how the moving average works. I don't use the moving average, right? So if you're on this, I think you're trying to go with what I use. I don't use it, right? But you have to know something about it. So popular line. So we are done with this, right? The elementary, right? I think our next one will be on chart patterns, right? So let's go back. Let's review. I said we have a lot of charts, right? We have the bar chart, we have the line chart, we have the Fibonacci, right? We have the candlestick, right? Choose what works for you, stick to it. I use the candle and the line chart, right? I use the candle and the line chart, right? So you choose which one works for you. All the candle have, they are important. If you want to be less patient and hold trees for long, you use the Fibonacci. But if you want to be very emotional and be reading each candle, you can use a normal candlestick, Japanese candle, right? The line chart only has a close and the open, no wick, right? It also has the advantage, it also has the disadvantage, right? Then we went to support and resistance. We said support is the floor, resistance is the ceiling, right? It happens in the bear structure, in the bullish structure, in the sideways structure too. There's support and resistance in, right? We move to the fib, right? The mathematical sequence that shows repetition in every living and non-living thing, right? There's a mathematical sequence that plays out in the universe, right? What happened today might happen tomorrow, right? But in a sequence, right? So that was how Leonardo Fibonacci came about, right? He's an Italian mathematician, right? He's a philosopher too, though. He came about with this, and we have to give it to him. So we named it according to his name, right? So Leonardo Fibonacci. Then we just have to name it the Fib, right? So that's how the name came about. Moving average, it just calculates the high and the low, right? Based on a candlestick and just present it in a line, right? We have traders who use it, right? Popular chart indicators. The indicators are we have the RSI, we have the stochastics. The moving average is also an indicator, right? So traders tend to use stuff to predict, right? When the RSI is above 80, it's overbought, right? So they have to sell. When it's below 20, it's oversold, so they have to buy, right? We have traders who trade that way, right? They trade. Everybody trade based on a sequence, based on a pattern that have repeated itself, right? And we have traders who still use the chart indicators, right? They still use the moving average, right? So you choose what works for you, you stay with it. So our next lesson will be on the middle school. I don't think we need you're not going to use anything here. We'll just use the chart patterns, right? Then we move to the summer. No, we don't need anything here. I can actually alert wave. I don't teach alert wave, so you don't need it, right? Then we go to so I think our next lesson will be on the chart pattern, right? Then we move to the high school straight, right? Then we go here, then we go here, sophomore here, then undergraduate, senior, then the graduation, right? So see you on the next lesson, right? Subscribe.